Hi, ladies and gentlemen. Is 8th of September 2018. It's 3:59 p.m. or it's 4 o'clock p.m. here in United Kingdom. My name is Edgar Raphael Dani. You can call me Edgar Raphael Masawi, whatever you like. And we are going straight on to the technical analysis this week. And we aren't going to look at any economic fundamental analysis so far, unless we're going to look on only one key event that happened last week, and all of you probably know. If you're an experienced trader, you already know the figures, you already took the opportunity. Or if you don't know, if you're still a beginner in trading, it was a non-farm payroll. Non-farm payroll is one of the best traders. It's a mother of all news in the world of currency trading. Now, either traded or not, yesterday that's when NFP came out, and it was a straight downward trend for any pair that is against US dollar. Now I'm telling you guys, yesterday the US non-farm payroll plus other news like employment rate, salary rises was so impressive, showing aggressive improvement of the US under Donald Trump. Now, to give you highlights of what happened last week was during the non-farm payroll day. The economic releases to watch in the US market last week were like employment situation report for August, commonly called the non-farm payroll from the Bureau of Labor Statistics, was released at 8:30 a.m. US time. This US economic statistics chart the health and trends of labor market. Now, as you all know, that labor is one of the key resources of any economic performance in any country. Now, with the good and from payroll news, we expect proper productivity in the US economy. And that's why most people pay attention to this news. Now, important components in that economic releases was non-farm payroll expected 191,000 prior month, which was 157,000-ish, if I'm not mistaken. 6-month average of 221,000. The manufacturing payroll expected to 24,000, prior 37,000, 6-month average of 29,000. So we expected a drop on manufacturing payrolls. Unemployment rate expected another drop of 3.8%, prior 3.9%. 6-month average of 4.0%. Average earnings increase month to month was expected at 0.2%, a prior of 0.3%, 6-month average of 0.2%. And last but not least, average earnings increase year to year expected 2.7%, prior month 2.7%, 6-month average 2.7%. Guys, all these expectations were beaten up by the official news came out the US Bureau of Labor Statistics. All were beaten up, and it was such important, very good, I would say impressive, remarkable results from the Bureau of Labor Statistics. Now, in short, we say the US labor market at the end of the results we've seen that has been strong for the last 18 months. So you keep on seeing an upward trend. As continued robust performance into the final quarter is expected, misses in monthly statistics tend to undermine the dollar and beat the normal support of the US currency. But now, as I say that the normal beat the normal US support, now after the news came out positive, we have seen a strong upward trend which hit this resistance, which hit this resistance, which was a support before, and we see a massive upward movement. Now it retraces back again to the support level, and we see the formation of a new upward pattern. Now, guys, after seeing this is such a good thing for the US dollar. Now, we are going to trade based on this performance, based on this review. Now, guys, before going any further, this is educational purpose video. It is not a financial providing service or any kind of signal providing service. Now be careful, because trading is at your own risk. We just point out important opportunities in the market. Alright, in the market. So let's start. So as I said earlier, that the dollar currency index has just made this 95.1 as the official resistance line. Now, if you look closer, we have this green line here, which acts as a potential resistance line for the coming week, which is 95.49. And earlier last week, we see a bounce from this, which is also called a reversal of 95.51. Then came back to this support level of 94.96. Now it's coming back to this resistance line again. So the price is keeping on testing that level again and again. Now, what should we expect for this week? I'm expecting this is what I'm going to expect. So, oopsie. No, I don't need that. I need a Fibonacci retracement. Now, why is Fibonacci retracement? I said a couple times. It gives me a good, sweet entry point. So, if you look here, let me zoom in for you guys. If you look here, 0.618 and 0.5 have been key levels from the past trading periods. Now, if you look here from the past 2 weeks, you have seen the price has been like trying to kiss this level of 0.5. Let me just draw a line. This line here, yeah, over there. Now this is just a temporary line for now, you guys, just to have a level of which we believe the price is going to retrace, and that is going to give a signal to buy into dollar index. Now, after saying that, so I expect the price to come to drop to this green line over here, which acts as a support line temporarily, 95.18 for this coming week. So price reversing to this level and bounce back, that will be a good indicator for me to buy or to go long on dollar. So let's jump in to other currency. Now, I've trimmed down the number of currency pairs I'm going to trade. I just want to focus on the main key pairs, that's Euro USD, US Japanese yen, and other commodities such as US oil and gold. Because it's quite easier to trade and focus on a few trades, and if I can take 3 to 4 trades per week, that's good enough for me. I've tested that. I see myself doing and performing better by doing that kind of strategy instead of just jumping in as a lot of trades in a week, which you can lose a lot of money eventually. Now let's jump to US Japanese yen. So from last week, I traded this pair and it was such a good profit for me. I made like 2% return on one trade, which I bought over here soon after, just right after the £9 Peru news came out. We saw a massive bounce upward, and my strategy was not to jump into the market here, but to expect a reversal coming back to this level and buy into the market. Now, this is a 4 hours chart, so it's quite hard for you to see where I entered. Now, to review for you guys, see this green line over here of 110.77. This is the level that I entered this pair. I bought here and I made several pips in returns. Let's see how much I made. So normally I do risk reward ratio, of which was on this key MACD curve here, inverse. So I was ready to risk 0.18% of my account with expectation of actually I put my return to be here at 111.394, but it was a far reach target, so I decided to trim it down. But what I believe is for the coming week, the price will come to these levels here. But for one day. I put my stop over here, my taking profit and my stops over here. So risking 0.12% of my account and 0.38% in returns. Thus the risk reward of 2.14 was something that I was looking for, and I got it, and such impressive trade for me. Now what I see for the coming week is that let's go for the daily. Where are you, Mr. Daily return? Daily time frame. So what do you see in a daily time frame? I see. Now, if you use a Fibonacci retracement, now remember, guys, Japanese yen is in a new upward trend as it tested this long downward trend. Now it does form a new upward trend. So the price retraced from 0.618, and my expectation for the coming week is the further upward movement to these levels here of 112.057. So yeah, so my what can I say? My verdict on this pair for the coming week is long, but I'll be careful on my entry points. So if you wanna improve your entry points, just read books, guys. There's a way of improving your entry points. For me, I look at 1 hour and 15 minutes time frame, and I look for that appropriate entry point. And that's one of my secrets I do, and it works really well for me. I'll teach you guys in my courses if you're interested. So yes, if you wanna join, if you wanna have courses with me, I'll just email me or comment down below on my YouTube channel, and we are going to have a chat, a proper chat. Now remember, guys, I hardly teach anyone. I just teach people who I see they have the potential in this game, because this game is not for everyone. I said it earlier and I'll say it again. I don't want to sound cocky, but I want to sound honest with you guys. This game is different. Alright, you need there's so much going on. I'll explain to you all. So yeah, I'll drop this key level over here and just make it tighter. The other one key level over here. So let's jump on to another pair. Euro USD. Now USD was such an impressive trade last week. Why? Because of 9-pound parallel. We saw a standard deviation of 0.8. That's a more volatility in the market that was pumped in on this pair. Literally all traders we're talking. So before jumping to that explanation, that 60% of traders trade USD is the most traded pair in the world. Now, the standard deviation we saw yesterday after 9-pound parallel news was 0.8. Now that's huge, guys. It might sound abstract to you, but as long as time goes on, you start to learn how to trade and gain experience, you understand 0.8 is a massive opportunity. Now, on the daily time frame, we look here, we see this massive red candle, which I kind of entered all right here, where it broke the support level, and that's where the momentum was just out. Just bang. We went all the way down to this level of 1.1539. Now my expectation for the coming week, I expect this price, this pair, to kind of retrace back a little bit, and test some of the key levels. Let me keep it tight and nice. It's gonna test some of these key levels here. Now, here's the thing, if it bounces back to this key downward trend, that's good. We're gonna show this. We expect a further drop to this key target level of 1.1548. Now this is gonna happen under technical abundances of traders out there who are going to enter this trade based on technical analysis they did. But if there's any economic fundamental is going to happen, it's going to hit the market, and anything might happen, either up or down. So if I draw for you guys, so I'm expecting a bounce here and a further downward trend. Oops. or a bounce here and a further downward trend to these levels. You got it, guys? Yeah. But I would love to see it coming to these levels of 1.1596 because it kind of it's a bit reliable. Because I don't want to enter trade here and it's like a limbo because anything might happen, they'll go up and people. It's just the risk is too high for me to just trade over here. But I would love to trade here, this level here of 1.1597. Alright, now there is a correlation between dollar index to US Japanese yen and Euro USD, and there's another correlation between Euro USD and Euro Japanese yen. I just realized yesterday when I was trading the 9th Ampero, and one of my mentors, he just told me, yeah, those are the things we get experience as long time goes on when you trade forex. That there's so much interconnection happening in these prices, and you just have to pick one of the best players and just focus on them and make good returns. Now that's what I just took from him. I'm gonna focus on Euro Japanese yen with USD. Now I understand how this mechanism works. I'm gonna make a good trade out of this. Now let's look here. Remember guys, this massive drop of Euro USD last week influenced a massive drop in Euro Japanese yen as well last week. As I said, there is a correlation, and it's a positive one. Now, if you enter the trade over here, good for you. You made a good return. I did not trade this last week because I put my stop losses very tight, and I got stopped out really quick. But yes, that's one of my mistakes. When I do trade, I hate it, but it happens all the time. Something I cannot control, but I'm working on it. Now, we see a downward trend like that. My expectation for this week, after saying that, remember guys, I said that dollar index is gonna bounce back to these levels. Now, if it happens, see, you're gonna expect appreciation in the euro. Now, if there's going to be an appreciation, expect it to bounce back to this level here of 128.612, and if that's going to happen here, that's going to expect a further downward trend to these targets. No, that's not target. I haven't put any targets so far. Probably here of 127.492. Yeah. I think it's probably gonna be here. Now, yeah. So I'm more interested to look for the further downward trend from this level here. Shit. To this green line here, which is gonna have a support level or a further downward trend. This is a big call. It's a far-fetched one. It's a long-term trade, but I don't see it's gonna happen anytime soon. But yeah, probably to this level. But this green line here is a potential support level for me for the coming week. What else am I looking at? Yeah, actually USD Canadian dollar was my best trade last week. I made roughly 3% return. Yeah, 3% return. 3% return. Alright, what about gold? Gold as well, I traded last week, was one of my best trades as well, after I used Canadian dollar. I remember I traded from here, roughly was 1,202.90. So what do you expect for this coming week? I don't want to trade gold because it's in the middle of nowhere, and every time I'm trying to look for an entry point, I'm a bit skeptical and want to enter. But I'm expecting a short-term appreciation after the dollar index drop a bit, a short-term drop, and a further downward trend. But I'm still haven't got a better entry level, because for this price to come back here, it's gonna take days, and gold It's a very slow moving product. I just wait. You're gonna have to wait for a long time. So yeah, this level, my bounce here, come to this key level here, and then follow down a trend. Yeah. Now US oil. Yes, US oil. Love this. I love this. Now US oil broke this key support level. Now it bounced back, and this key support level becoming resistance. Now expect a further downward trend. Probably bounce back again, make a 0.61 Fibonacci retracement, and further downward trend. That's how I see it for the coming week. To this green line here of 66.12. Now, I think this is gonna be my first trade for the coming week. Yeah. On Monday morning, this is gonna be my first trade. Just show you. I'm gonna sell this. You can look, if you look at the downward trend from the past month, there's a massive downward trend. There's so many sellers in this commodity. So probability for you to go back up to this levels here is quite minute. So my expectation for this coming week is a further downward trend. So that's it, guys. I'm trying nowadays to look for other opportunities like UKX or FTSE 100, S&P. And I found some really interesting stuff. If you guys want to look out, but I don't think this interesting stuff are going to be any good for the coming week because they're really far from the key levels. But the DAX, after the massive investment from Saudi Arabian sovereign fund, and I'm not so sure about that. They injected lots of money in German economy, which we saw a 0.8 increase or appreciation in the DAX 30 index. So that can bring a little bit of fresh air in his index. Now remember, guys, now after the emerging market index, we've seen a massive bear market in the emerging markets. Now that is a really negative signal for other economies, because countries like US still depend on these markets. Countries like UK plus Germany, they depend on these other markets, the emerging markets, which include India, China, South Africa, Brazil, Argentina, those kind of countries. Now, if these countries start to underperform, it's gonna affect these other major developed countries, and that's how that's how my analysis is for these indexes. But yeah, who knows what's gonna happen? So, but there's another confusing thing. The dilemma I have is, there's almost there's this over pricing of this commodity, of these indexes since 2009, where the quantitative easing was brought into the economies like US and the European Union, trying to inject a lot of money to boost the economy. You've seen a massive upward movement, a massive appreciation, a boom market, overreaction of buyers to outstanding levels. And that kind of scares me, because you don't want to show it, because if you're short, you're on the wrong side of the market. At the same time, if you're not long it, with this emerging markets dilemma, it just makes things bad. So yeah, it's something you guys have to look at and just do your research on that. Anyways, guys, thank you so much for your attention, and please just subscribe, like us, share us, to get, even press the alert, like the bell shape thing, just to to get alerts on every analysis I'm going to give out every week. Stay updated in the market and you being able to make good returns. So thank you, guys, and bye bye. Cheers. Take care.